institutions are not going to be like heavily investing in these things, right? So it brings us back to that idea that, okay, well, they probably, if we get a spot ETF, they probably would start to heavily invest in Bitcoin, which goes with the whole dominance side of things as well. So I think that's just something that investors, they get so excited, and I don't blame them. I mean, that move on Ripple was incredible. Although, to be honest, I thought it would go more, maybe because it wasn't a full win and there's the appeal process. But for me, it's still this kind of pseudo gray now with maybe a little bit more clarity, but not enough to really release the Kraken, as they say,
It is no longer news that the crypto world is preparing for a very big rally, and in this video, we join Gareth Soloway, president of Verified Investing, as he provides his analysis regarding the broad crypto market, Bitcoin dominance, and his stand on the US de-dollarization and how it affects the crypto and general financial system. Crypto exchange Binance announced it has completed the integration of Bitcoin on the Lightning Network. The move will enable Binance users to leverage the scaling solution for Bitcoin deposits and withdrawals. When depositing Bitcoin, users will have the additional option of Bitcoin Lightning, alongside the standard choices of Bitcoin, BEP20, SegWit, and others. With the latest integration, Binance now stands alongside other prominent players such as Kraken, OKX, Bitfinex, and River Financial to adopt the Layer 2 scaling solution. Binance initially indicated its intention to integrate the Lightning Network in May, prompted by the temporary suspension of Bitcoin withdrawals due to an influx of pending transactions caused by the significant upsurge in Bitcoin network gas fees. A recent report by Valkyrie Investments stated that the adoption of the Lightning Network is rapidly gaining momentum in emerging markets such as South America and Africa, largely driven by the initiatives of the Lightning Network mobile payment application Strike. Meanwhile, the company behind Lightning Network, Lightning Labs, recently released a new toolkit that assists AI applications such as OpenAI's ChatGPT to interact with the Bitcoin network to send, receive, and hold the crypto asset. As we now go into the video, don't forget to hit the like button, subscribe, and drop your comments below.
Even though I believe that Bitcoin dominance was ultimately going to head higher, there was opportunities for kind of a snapback on some of the altcoins. And so for instance, I had members at Verified Investing Crypto. We were long Cardano with this beautiful little wedge. And then as it popped into this area, that's where we started to unload, right? So it's the swing trade ability to kind of just be in and be out and understand the bigger macro picture. But you can see what's happened. I mean, Cardano's come right back in. Now, interestingly enough, what this does for me, at least, is this potentially brings up a opportunity here. And I'm just looking for some chart things here. Like, so for me, this now becomes, let me do it again here. This becomes support right here, right? So you have this trend line and this trend line, which were this was former resistance. When resistance breaks, it now becomes support. And so for me, and this is again, strictly on a swing trade basis, I would potentially be interested in unloading or excuse me, buying Cardano again back at around 29 cents, give or take. And the same thing for Matic, right? I mean, these things were quick poppers. Now it's retracing. So now you have some opportunities on the way back down where you can play. But again, I think it's important to just caveat this for everyone watching that we're not at least I'm not talking about long-term holds. These are make 10%, 15%, be out of the type of trading opportunities.
You don't know what the news is going to be that's going to associate itself with the price action, but it nevertheless usually comes.
And I do want to just point out too, is that just with Bitcoin dominance going up, again, just to reiterate, it doesn't necessarily guarantee Bitcoin's going to go up from here, right? So Bitcoin could drop 20%, alts could drop 40%, right? And then dominance still goes up in that situation. So just to be aware, and the only reason I bring this up too is if I just flip to my chart, is that there's been some, even though we're still technically stuck in a sideways consolidation, which is usually bullish for Bitcoin, I'm struggling with some factors here, right? So we keep on making these attempts and making even slightly higher highs, and then something's causing Bitcoin to kind of reverse super quickly. Like this candle right here technically fits a topping tail, and topping tail in technical analysis is a bearish indicator. Here we had this beautiful close. It was like the first close or the highest close we've seen. And the next day, Bitcoin fell right back down, negating that entire move up, which again is not confidence building. It's not a good signal for Bitcoin. And then we've just gone sideways. And you can see, actually, I put in a channel now. There's a pretty clear sideways upsloping channel that's kind of keeping price in this range. So I think just from my perspective is that you have to admit that this sideways chop after a move up is usually bullish, but it's not been an easy success breakout situation for Bitcoin. And I do wonder at some point, if this thing can't break out, path of least resistance is to the downside. And where's the big money, right? And the big money is not going to be, I mean, you got a spot ETF, which is going to draw, think about it like a magnet. The spot ETF basically has to be approved by the SEC, which is going to give semi-green light to Bitcoin for institutions. They're not getting that green light with altcoins at this point. Doesn't mean it won't happen in a few years, but as of now, it certainly does seem like that's the place to be. So I want to touch base on something that I've been looking at here, which is the US dollar, and get your views on this. So we've seen a pretty impressive breakdown just in the last week on the US dollar. And according to me, according to what I'm seeing, I do see some support coming in here, but everything I'm seeing is pointing to eventually further downside in the US dollar.
Are you tired of the boring old stocks and bonds and would like to add some much-needed variety to your retirement savings account? Look no further than iTrust Capital, America's #1 self-directed digital IRA platform for individual investors. iTrust Capital allows you to enjoy the flexibility and tax benefits of individual retirement accounts (IRA) while investing in the exciting world of cryptocurrencies. With over 30 popular cryptocurrency offerings including Bitcoin, Ether, Dogecoin, Polkadot, Axie Infinity, Polygon, and Uniswap, you can invest in all your favorite cryptocurrencies and trade them 24 hours a day and 7 days a week from the comfort of your homes. You can also invest in physical gold and silver, while personally taking charge of your retirement plans and future with iTrust Capital. iTrust Capital is committed to providing a safe and secure platform for investors. The platform uses advanced security measures such as multi-factor authentication and cold storage to protect investors' assets and information. iTrust Capital is also regulated by the SEC and FINRA, ensuring investors are protected by the highest regulatory standards. Investing just got more exciting with iTrust Capital's new conditional transactions feature. This feature allows you to set conditional buy and sell orders so you never miss out on market rallies or get trapped during downtrends. Step into an exciting new world of opportunities with America's #1 crypto IRA platform by following the link in the description box below. It is safe and secure and gives you the much-needed variety for your traditional Roth, SEP, or simple IRA. Don't miss out on the chance to invest in the future of finance. Click the link below to get started. Multiple people have warned about the end of the US dollar dominance, including Rich Dad Poor Dad author Robert Kiyosaki, S&P global economist Paul Grunwald, and veteran trader Jim Rogers. One currency that many expect to replace the US dollar is the proposed BRICS currency, which could be backed by gold. U.S. Treasury Secretary Janet Yellen, however, doesn't see the proposed BRICS currency as a threat to the USD. Gareth provides his analysis of the US dollar and what he believes would be the next course for the currency.
I'm looking at more for, the potential for the weakness in the US dollar that could drag on for years. And again, there's the difference between short term versus long term. But for me, it's like, you look at the US debt now, 32 trillion. And I think I was reading that 800 billion a year is just going to pay interest, right? And so the question becomes, how does the US get out of this? There was actually a chart I was just looking at in tax payments. Tax revenue for the government is now falling off a cliff to the downside, which means it's even harder, which ultimately leads to, well, how do you pay it if your revenue is going down, your debt is going up, your interest payments are going up? There's not a lot of options. Either you raise taxes, which isn't going to fly with the government the way it is, or you print money, right? So that kind of breeds, and again, this is more of a 1 to 2 year outlook, maybe potentially not like the next 6 months. But I think that's kind of where I am, and you're right, if we get in a situation where China does invade Taiwan, the dollar is going to spike on that. It's still the safe haven for the globe. But barring those type of scenarios, you got to think at least that it could head down. It's kind of part of the bull case for me on gold as well. That it's going to be interesting to see. I mean, I'm super intrigued by the next 6 to 12 months in terms of what markets do. I mean, we're now looking at, and just to bring people up to speed on some of the things I've been following, the Chinese reported major economic data yesterday. It was all atrocious. And the thing is, when they report a miss, in general, I always so if they report like 5% GDP, I'm always like, okay, it was probably like 3%. They always like to overestimate, right? So the fact is they're reporting misses below expectations. It's probably even worse. And what's fascinating about the China situation is that we actually have a scenario where they came out of their lockdown and you did see a quick push, but it didn't last the same time. Like the US has lasted for so long versus China. It was like, what, 3-6 months max versus a couple of years for the US. So really interesting to kind of keep an eye on that. And I wanted to just show, I'm just going to go to my Hang Seng chart here, because I do think it's important to kind of recognize that, you've been in this period where this chart here, if we zoom out, you can go back all the way, but you topped out on the Hang Seng in 07, and then you double topped in 18. But if we look here, we're so far away from all-time highs in China. And again, you have to wonder, well, what's the kicker here? I mean, China is the fastest growing economy in the world, yet their stock market is in the dumps compared to the US, which if we flip over to the SPX, I mean, look at this longer term monthly chart on the S&P, right? And look at the run we've seen. So again, is it their politics? Is it the communist side of things? I mean, I'm sure that all plays into money being wary about their tech crackdown and stuff like that. But again, it's just interesting to see. And then if China starts to weaken, does that signal weakness in the US or globally that we could be seeing? And again, you could look at the European Union. European Union's a mess. I mean, Germany to everywhere else. The US is kind of this one last domino that hasn't fallen. And I don't know if you have any views on the global economy and the domestic, but I'd be curious on that.
As Bitcoin enthusiasts await the flagship cryptocurrency's fourth block reward halving, expected around April 24, 2024, speculation is mounting about the potential impact on the cryptocurrency's price. A popular anonymous analyst has now suggested Bitcoin could surge to $40,000 or even $50,000 ahead of it. Bitcoin's price recently surged after the world's largest asset manager, BlackRock, filed for a spot Bitcoin exchange-traded fund, ETF, with the U.S. Securities and Exchange Commission, SEC, triggering a wave of other filings from financial behemoths collectively managing $27 trillion, including Fidelity and Invesco. With halving just 9 months away, analysts at J.P. Morgan, led by Nikolaos Panagiotsoglu, have predicted financial challenges for Bitcoin miners if the cryptocurrency's price and transaction costs fail to increase by that time. In a recently published video, Plan B, who is known for developing the stock-to-flow, suggested a Bitcoin price prediction in the range of $40,000 to $50,000 ahead of the halving. The analyst, it's worth noting, was criticized last year after his stock-to-flow model failed to remain accurate. In his latest video, however, he used the 200-week moving average as a tool to predict the potential future trend of the flagship cryptocurrency's price. Per his words, the 200-week moving average, which is a common indicator used in technical analysis that helps smooth our price data, has been increasing at about $500 per month, which means that in 9 months, it'll be up by $4,500 from roughly $28,000 to $32,000. Robert Kiyosaki, best known for his influential personal finance book, Rich Dad, Poor Dad, has predicted that Bitcoin could surge to an astounding $120,000 in the near term at a time when the BRICS nations are preparing to launch a gold-backed currency. Notably, the best-selling author's price target is seemingly in line with that of London-based multinational banking and financial services firm Standard Chartered, which recently suggested Bitcoin's price could surge to $50,000 this year and could breach the $120,000 by 2024's close. Back in April, the banking giant made waves in the market with its prediction of Bitcoin reaching $100,000 by the end of 2024, asserting a conclusion to the bleak crypto winter. Jeff Kendrick, one of Standard Chartered's leading foreign exchange analysts, has now voiced an optimistic revision to that forecast, citing a 20% upside in the bank's earlier call. The increased upside was related to increased miner profitability per Bitcoin, which means they can sell less while maintaining cash inflows. In turn, according to Kendrick, this will reduce the net Bitcoin supply and push the price of the cryptocurrency higher. Would the Bitcoin halving take Bitcoin to a new all-time high? Let us know what you think in the comment section below. Also, make sure to hit that like button, subscribe, and turn on notifications. Thanks for watching.